In this presentation, we want to think about how the bank feed process is going to fit into our accounting system, our accounting flow. This is very important to do because if you don't do this, what's going to happen is you'll connect to the bank, you'll have all of these transactions into your system, and you may not understand how those transactions are going to affect the financial statements and therefore not know how to include those transactions into the accounting system to create the financial statements. So get ready because we're dropping in to Wave. We are in our Get Great Guitars dashboard within Wave. We're going to be jumping over to a flowchart. That flowchart is actually on the QuickBooks desktop version, but we're just jumping over to QuickBooks desktop just to think about the flowchart and how the bank fee transactions will fit into that flowchart. So when we think about the accounting process, it's useful for us to break that accounting process out into sections or flows, that including the vendor section or the accounts payable section or the purchases section, whatever you want to call it, and then the customer section or the receivable section, accounts receivables, or the revenue section, whatever you want to call that, and then the employee section or payroll type of section. The reason it's helpful to think about this in terms of different flows is because then you can picture, as we see here, the flow chart of the processes that are going to happen as for each of these different sections. And then when you think about those different flows, you want to consider whether you're on a cash basis or accrual basis. And then where will the bank feeds fit in to that system, to that flow. So large companies will basically be on an accrual basis. They're going to be required to, and they'll go through the full flow process. However, small companies may have systems where they're basically on a cash basis for one of the components and maybe on a more of an accrual basis for another one of the components. For example, it's quite possible that a small company needs to be more on an accrual basis for the receivables because they need to track the outstanding receivable, whereas on the payables or on the payment side, on the expense side of things, they're more on a cash basis and they're completely dependent on the bank, basically waiting until those feeds basically clear the bank. So we want to think about where we stand with those items. Remember that the more you're on a cash basis system, the more likely that depending directly on the bank feeds will work well for you. An accounting software like Wave does have other options to track the receivable and the payable. But even a software that has those options, note that you still have to think about how the bank feeds are going to fit into the system. So for example, if we just take a look at the customer section, note that if you're the type of industry that basically gets paid and you just get like electronic transfers, let's say you do e-commerce or something like that, and you get paid by like Amazon for affiliate marketing, or you write books and you get paid by Amazon for the books, or Audible and they pay you for Audible, or YouTube and they pay you through AdSense. Once you get the payment for those items, you're just going to basically record the revenue when you receive them. Bank feeds work great for that type of business because you could just wait till you get paid and just record the revenue at that point. But if you're in the type of business where you have to bill the client, something like a law firm or a bookkeeping firm or landscaping, where you do the work first, you count the hours that it took, then you bill the client, then you track how much is going to be received, you typically then have to use invoicing. When you use invoicing, then the accounts receivable is going to go up and the other side is going to be revenue at the point in time of the invoice. And there's no cash involved at that point in time. So now you just did an accrual thing. You posted something that doesn't have something involved with cash because you need to track the accounts receivable. Note that invoicing is something that Wave promotes because obviously they're trying to get the payments to go through their system for invoicing. So they should be able to track that receivable as well. But just note that it at the point in time you send the invoice, cash isn't involved. Therefore, you're going to have the invoice, and then you're going to have basically a cash payment for the deposit from the customer in the future at some point in time, and you're going to have to match those two things out in some way, shape, or form. The normal process for full service accounting would be that you enter the invoice, then you receive the payment, then you put it in the bank in the same format that you expect it to be seen on the bank statement in the accounting system, and then you match that to what you find in the bank feeds or at the bank with a bank reconciliation. What you're doing with bank feeds would be, if you did this full process, the bank feed would come in, you would already have the deposit and you would simply just match it out. Or you could basically make the invoice and you could say, I'm not going to record the receipt of the payment on my side on the books. I'm going to wait till it clears the bank with the bank feeds and then see if I can match up the bank fee transaction to the invoice that I made. So those are a couple different ways that you can work in basically an invoice process to the bank feeds. How are you going to match up this accrual and system to the bank feeds. The same is true for the payable side of things. Again, a lot of small companies might just have their payables done electronically. You're paying your payables electronically. They're going to go through the bank, and then when they come in on the bank feeds, you basically record those out, and that worked quite well for a lot of organizations. However, a lot of organizations need to track the payables. If you have a lot of outstanding payables and you need to track them, now you're on more of an accrual system. And again, I believe Wave does have a tracking feature for that, but in any case, no matter what software you're using, if you're using the bank feeds, and then you're going to be putting into a bill into the system, which is a non-cash transaction, increase in accounts payable, and the other side going to an expense or something like that, then you have to think about, well, how is the bank fee transaction, which will be over here, the payment of the bill, going to tie into the bills that we put in place? So what's the flow going to be like in this system? If you have inventory, then you have the added complexity of inventory as well, in that inventory is going to be an asset. So you'll typically purchase the inventory. You have the billing of the inventory and then the recording of the inventory on the books. So you got to consider, how are you going to track the inventory process? If you go to the employee side of things, then you got to consider, are you going to be running payroll within the accounting software like Wave, upgrading to the Wave accounting software where the system will help you to record it? Again, if that's the case, you're still kind of stepping away in some degree from a complete cash basis, because you're going to have to withhold the withholdings. And so you're going to have a payable account for the withholdings. Or if you have employees, you might have someone outside, another payroll company like an ADP or a Paychex, to help you out with the payroll, and then record things once they clear the bank, at which point you'll see them on the bank feeds. So that's just kind of an overview of how are these bank feeds going to be fitting into your system. You want to get an idea of that. Are you on a cash basis or an accrual basis? And think about these three kind of flows. Are you on a cash basis or an accrual basis with these three flows? And then how will the bank feeds fit into that system? Once you have that set up, then you can think about your bank feeds. You also, once you set up the bank feeds, want to be considering, do I already have bookkeeping information from the past that I need to enter the bank feeds in at this point in time? In which case you don't want to duplicate the information. You want to make sure you have a cutoff between when the bank feeds start and the prior point. And you want to consider, if you're trying to get like a whole year's worth of data with the bank feeds, you may not be able to get that all with the bank feed. So then you might have to think about, well, is there any way I can download that information from the bank and upload it? So those are some things to consider once we start the bank feed. So Nick, so that's it for now. Let's get out of here.